We have some of the biggest fund managers talking about the stock markets.
So where do you really see this, going forward, and how do you see the space playing out?
So point number one is, yes, as a basket, this segment has done well, but as you rightly said, that there is also going to be higher volatility. And being small, the possibility and the option of growing a bit faster than the larger cap is also obviously there. However, one point we have to remember is that you can't take mid cap and small cap as a basket. So, there have been companies which have done very, very well, but there have also been some companies which have just disappeared. So, when you go into investing in a mid and small cap, you can't take them as a basket. There's going to be more stock specific, more sector specific. Obviously, with higher volatility, return expectations are also higher. And in cases where growth expectations are higher, the valuations will also be higher. So it will be a function of a combination of all these which will determine whether the stock is cheap or not cheap and whether it deserves a higher valuation or not a higher valuation.
So essentially, to say that there are still opportunities, but you have to be very selective about what you would really. So it's not a basket approach, but more a sort of bottom-up, stock-driven.
In mid and small cap, it has to be, a bottoms-up approach. Obviously, you will have a perspective that e-commerce can be a great segment. So you might lead into that bottoms up depending on some of the themes which you basically decide on. However, it has to be stock specific very clearly.
Sure. So Anoop, if I would just drive on that point. So what do you think has been some of the reasons for the performance behind the way these stocks have moved up? Is it fundamental, or is that it's flows driven? Just some of your thoughts on that.
Sure. I think so. My view is that if you look at the small cap space in India, it reflects the mood. It reflects the mood of Indian investors towards equity. So if you were to see periods of time, when they are not very positively inclined towards equity, then the small cap index has given negative returns, which is the period of 2011, 2012. And when they are very positive on equities, this space gives very high returns. So this you have to first balance it in this context, that a lot of Indian investors feel that the might of the foreigners and plus the case of domestic mutual funds, these guys don't want to play in the large cap space or even in the mid cap space, and therefore this space is available for them to operate. Post 2009, that after the debacle of 2008 as such, a lot of funds took a policy to stay out of companies beyond a certain kind of market cap, and I think so. A few or several investors who had more foresight, who had more advantage, were able to pick up stocks which were doing well, and then we had a bump up in the economy as such. A lot of those companies were also related to the housing sector, so you'll find a whole lot of sectors related to housing where you have the small cap exposure have done very well. So it wouldn't be very surprising to find that people who invested in 2009, 2010 in the small cap space are up 15 times, 20 times, 10 times, from those levels. What one should worry is from here on what is there, because just the success of this space has made it much more viable for others and attractive. And given our industry's great ability not to miss on any opportunity, I'm sure we've already started the process of launching small cap funds, and we will do several more. So so here in terms of thought process is that if you were to see the mood of Indian investors, then that is best reflected in the small cap index. And if it is flat or negative, then you won't get flows into equities as it is in India. And when you see that index is doing well, you will see flows into equities being fairly strong. So I'll just stop.
Sure. Okay, thanks. So just sort of building upon that point, Anand, what are you hearing from, say, the foreign investors on this particular space? What is the sort of mood? How do they view the small and mid cap space in India?
From a foreign investor's perspective, this is a very tough space to play. Typically, the money they want to invest in India is larger than the size of opportunities which is available in this listed space. So I think they have been, till now, been very tentative. If you look at the ownership of foreign investors in India of the total of $300 billion, more than, I think, about 40% of that is in top 20 or 25 stocks. So it's a very concentrated holding on very large companies. And they have been, and therefore, like Anoop said, the moves of small cap is more indicative of domestic bullishness.
Right.
And domestic investors' bullishness till recently. But of late, yes, there has been looking at the space, and I think some of the investors are shown willingness to take a concentrated mid and small cap only kind of exposure to the Indian space. But it's in a very beginning kind of a stage. Unlike private equities, where it is very well established to start to invest in smaller sized firms, in public equities, the foreigners would stick with liquid large cap or large mid cap names, and they're kind of reluctant to move down the cap curve.
Okay, we will get back to that discussion because it's really getting very interesting, but just need to address one earnings since it's an important set of earnings. Sun TV's numbers flashing on your screen, net profit of 208.
The thought process of going too deep into the country would be to that extent limited. And third, obviously, liquidity would be an issue. But I think all these becomes an advantage for an onshore asset managers like us. What we have also seen is global investors are also realizing that there is an opportunity, specifically in upcoming sectors, of investing in some of the smaller companies. And instead of going directly into those companies, at least we have seen mandates coming in from foreign investors to us that you invest on behalf of us. So I think it's a great opportunity which they also realize, and because they have challenges of investing directly, they are using onshore fund managers like us to try and make good of that opportunity.
That's sure. So now, Prashant, if I would really just pose a question to you more about how do you really, the meat of the issue, how do you really manage a sort of small and mid cap? So what is how different is it from, say, managing a more diversified equity strategy as compared to a small and mid cap? And what are some of the parameters that you would keep in mind specifically for a small and mid cap fund when you're managing one of those?
So I think, at least in our company, I don't think we differentiate on the basis of capitalization. And as I mentioned earlier, I mean, businesses where the business itself is small tend to be in the small and mid cap space, and vice versa. I think we tend to focus a lot more on the leadership of companies. If you are a leader in a small space, you will be a small or a mid cap company, and if you are a leader in a large business, you will be a large cap company. So I think we look at more from a perspective of competitive advantages and not from a perspective of capitalization. So I think there is not much difference in my opinion, between how you manage a small or a mid cap fund and how you manage a large cap fund. And I think the difference is even less in the case of mutual funds, because the liquidity needs of a mutual fund by its very definition are much lower.
Sure. Okay. So Anoop, if I would ask you, the universe obviously out there of stocks, is fairly large on the small and mid space. How do you really, first get the deep dive inside, and how do you really identify the ones you would want to build your portfolio out of? Something, if you could just give us some insights into that.
No, I was thinking about it to give you the perfect answer for this kind of a question. So if you want to do a checklist, first check for, first is that you go and check the holding of the promoter. So the rule is there that if he has a stake higher, it's better than if he has a lower stake. See whether he's financially trained or he's actually technically trained. I was trying to be very subtle out here. Normally I would say something else, but I thought this time I'll be more subtle. Third is that what kind of import duties against which they are playing. It's a large part of your cost as such, because today that becomes a fairly important part. You don't want to get shocked by something where import duties or imports from China can come in and hit you in one quarter and you're not alive. One of the traps most people tend to fall in small cap companies is that they focus primarily on just the case of P&L account, and they look at profit growth and they don't see the balance sheet as much. So if you look at the small cap space, you'll find most of the reports or even the focus is on the nearest quarter number, what is the next 2 quarters earnings, and people tend to overlook the balance sheet side. So it is not rare to find here in this space that companies which have got lower ratios in terms of ROEs or ROCs compared to the large cap peers trade at a higher valuation, A, because they are not liquid enough, or B, they have got earnings momentum on their side for the next few quarters, which leads to that. So, and if you were to complete the checklist, that's very important. That don't focus just on the P&L account, focus on the balance sheet as well. And try not to pay more than what's required. So one rule should be that if you missed a stock, don't have regrets. You will find something else coming up. So don't have to chase up something which was at 10p and it's now at 25. Because while the dream sold is that these are small accounts and they'll all become into oak tree, there are very few of these accounts which actually become into oak tree. So it's best to leave a lot of accounts on the road or on the wayside and choose it where your downside is more limited. Rather than thinking that everything that you're going to buy is going to be something which will become oak tree. So for that every Sun Pharma which has become Sun Pharma over 20 years, there are several other Shasuns which have remained where they are.
Right.
So that's something that you have to be more selective of. And I guess in the end, like in investing, pray a lot and be lucky. So,
Thanks for that. So Anand, just taking that forward, given that it's fair to say that there's a fair bit of probably extra intensive research that's required on this part. The large cap space is traditionally very well covered, by sell side analysts, and So what sort of support, or what sort of this thing do you think that can be built up on the small and mid cap side, or is that something that you all do completely internally, from Franklin's perspective?
It's an interesting question. It's a very challenging space for managing large quantum of assets because the depth of due diligence which is readily available in the market is low, unlike the other larger caps where you get 25 different views on a company. So even if you miss 1 or 2 negative points or a positive point, someone will point it out to you. And the chances that therefore you will be better informed is higher, whereas in the small cap, the ability to build a bandwidth, both from a research perspective as well as from a portfolio management perspective, is pretty tough. That's the reason why we have been a little bit circumspect or telling people that, just don't put too much of money in that, because we need to back it up with adequate. And also, since it is not readily available, you have to do it internally. You need to develop a whole set of framework to do that, right? It's not easy. Small cap companies which are owner managed versus a professional managed. They may not have well-diversified boards. They may not have corporate governance things. They may not have independent, board advisory. They may not even have proper auditors, which you might like to believe in, kind of a thing. So there are multiple challenges, and unless you have a checklist and you tick it consciously or not tick it, the chances that you will end up with a few lemons in your portfolio is pretty high. In fact, it will be very interesting if we can go 5 or 7 years back, if there have been mid and small cap portfolios, to look at what kind of stocks they held then, how many of them had enough longevity and sustenance to sustain over these years and you hold it now, and how many of them fell by the wayside, because the percentage of failures or obsolescence or you getting it wrong is pretty high.
That's right.
So it's a very big challenge, and we think as the size grows, the AMCs are also continuously investing in bandwidth to ensure that we do a reasonably decent job out of it.
Sure. Thanks. So which really brings me to one of the more common sort of discussed points. Prashant, if I may start with asking you about it. I know you've been posed this question many times, but really the size of the fund and, where, your team's obviously done an incredible job and you've managed some of the largest equity strategies, and you've managed those strategies really well despite the increasing size. So just wanted to maybe pick your brains and, what are some of the things that you've kept in mind? Obviously, like Anand mentioned, that on the small and mid-cap space, the size grows, you need to increase your coverage. So that's, it works both ways. You get economies of scale if your size is growing, but again, you have to put out new ideas. So really, how have you managed this for so many years successfully?
So I think yes, size is relevant, more relevant in the small and mid-cap space than it